Welcome to this edition of BanKable Insights with me, Godfrey Mutizwa. Now, from his fiery 1986 speech denouncing apartheid to his support for Barack Obama for 8 years as vice president, Joe Biden comes with loads of capital for Africans and expectations that are high that the insults of the past 4 years are going to be at the bottom of the history dustbin. And now the question we're asking is, so can we expect a flood of American capital coming into Africa and South Africa post-January 2021? Let me welcome my guest for this edition of the program. Jeremy Amias is Vice Chair Americas at StanChart. Jeremy, is optimism misplaced?
No, good afternoon, and thank you very much for having me. I don't think optimism is misplaced. I think Joe Biden will have a more international outlook, but I don't think it's like flicking a switch. Doing business internationally for American companies is always a slow burn, especially in parts of the world that they are not so familiar with. And that is what we at Standard Chartered are very focused on, being an international bank that has big historical footprint in many emerging markets, including a large part of sub-Saharan Africa. So while we are obviously trying to market our American clients doing more business in Africa, it is a slow burn, and I don't expect a flick of the switch. Biden will certainly have a more international outlook, and I do believe there'll be more predictability around the relationship, for example, with China. But I also think there is a big American feeling, as was evidenced in the election, that some of the policies around promoting American manufacturing and American production will be maintained. And in fact, Biden, in his conversations around infrastructure spend, has talked a lot about America first. So I don't expect a flick of the switch, as you might say.
Yeah, you certainly know Africa more than most, a century of the bank having been present on the African continent. Now, you have done a study, and this study, from what I see here, shows that just 13% of American businesses are listing Africa as a top 3 investment destination. I mean, as an African, I'm surprised. But what are the issues that American businesses are concerned about, and how do we go about correcting this?
Yeah, we did recently commission this research project, although things may have changed literally in the last few months because of COVID, which may push towards more diversification. The fact is, Africa is still a small area for American companies to operate in, and they do see a lot of opportunity in other parts of the emerging world, notably in Asia and the Middle East and Europe. Entering any new market is never easy. Given our experience at Standard Chartered and our deep history, as you say, in helping clients navigate the emerging markets, we do see that there is obviously a difference in all markets in cultures, regulations, and operational style. And those do present a lot of challenges. Things take time in Africa. Things take time everywhere. And maybe it's not priority number one. However, there are some very good reasons for optimism based on some recent activities. Also, regulatory changes and unfamiliarity is often a reason why people take time to get involved in a new market. I think African countries do need to prioritize their projects which are aimed at improving the ease of doing business in their countries. Yeah. Interestingly, foreign direct investment flows into Africa from the US peaked in 2014, and they've been somewhat muted ever since. So I think we need to look to policy changes and transparency, which will make these things better. And they are a slow burn. I'll give you an example of a slow burn and a bright spot. Namibia recently started exporting beef to the US. Right, in 2020, it became the first African country to export red meat to the US. It sent 25 tons to Philadelphia. Right? And obviously, Namibia has a big business in free-range, hormone-free beef. Mm-hmm. And hopefully, that we believe set to send 860 tons during this year and maybe 5,000 tons within the next 5 years. Right? This apparently took 15 years to negotiate. I mean, agricultural import and export is a very complex issue with the US. It's just an example. Yeah. These things take.
Yeah. No, I hear you. And yet we have had an economic environment on the African continent, like in other parts of the world, that has been changed completely by COVID-19. And I want to know from your perspective whether this presents Africa with a new opportunity to try to re-engage American firms and try and see if we can get more American companies, capital onto the African continent.
I think perversely it has. It's been obviously a great shock to the whole world, COVID. As we all know, economic slippage, per capita incomes have gone back to levels of some years ago, and that's true in the West and in the developed world as well. and lost opportunity. But nothing has changed the economic fundamentals. Nothing's changed the natural resources in Africa or the human resources. Africa still offers, tremendous youthful demographics. Governments that will now have to get more serious about reforms because of these shocks. So, for example, there is now some talk of privatization of state oil companies in Angola, even in Nigeria, things that weren't talked about before. There's talk in South Africa of private funding for infrastructure spending. So these could be the result of an emergency shock. And actually, COVID, in a way, could help jumpstart these processes. And so I think that that COVID, in some ways, can help and can pressurize people. Also, in 2020, there was good progress in African agriculture, as mentioned, and also in information and communication technology. Both have huge potential. And as you know, in January of 21, we will have the Africa Continental Free Trade Agreement coming into effect, which dismantles 90% of internal tariff barriers over 5 years. And that's been signed up to in principle by 54, I think, of 55 sub-Saharan countries. So this is very significant. And in an environment where the world is looking to diversify, I think Africa it becomes more compelling, actually, in this circumstance.
Yeah. Talk to me a little bit about that Africa Continental Free Trade Area from a bank perspective, from a Standard Chartered perspective. I mean, on the continent ourselves, we see it as a huge opportunity because never before have we seen our political leaders move faster in terms of coming up with such a grand project. But from a bank where you guys obviously work on the basis of actual tangible projects on the ground, how much does the AfCFTA make sense?
Yeah, it makes all free trade agreements. I'm personally a big free trade person. I guess, as all international banks are, like the idea of free trade. Although it doesn't necessarily help Standard Chartered in and of itself, we operate already individually in all these countries. It is very compelling for U.S. companies. When you're asking a U.S. company or an international company to locate in Africa, let's say for a business that is not on the ground, so it's not an oil and gas project, it's not a minerals project that is based on the location where they're going. You're basically saying use Africa as a place for its human capital, for its ability to move things around. Free trade agreement is massively important. That's what made the EU compelling, and I think that's what there's no doubt about that. That has huge potential because it brings down barriers, and then it also enables you to if you look at the way what happens in NAFTA or in North America now, things get manufactured, they cross the border often several times before they're finished. A free trade agreement allows that kind of thing to happen very well.
Yeah. When you look at the Africa Continental Free Trade Area, of course, as I said, I mean, it's a grand project. There's no question about it. When you look at the scale of the negotiations that still have to be undertaken, but of course, you've got the optimism of the politicians, without a question of doubt, lifting the mood that perhaps come January 2021, we'll be able to see that agreement being implemented. From a bank perspective, are there any specific sectors where you see easy wins that you could go to our American friends and say, actually, when you look at this continent, these are areas where you could come in and be able to see returns that justify your presence on the African continent?
I think as a general point, I mean, what happened during COVID is it amplified the needs for companies to diversify their supply chain, right? And so in a way, this could apply to all companies if you can convince them that they can manufacture and distribute throughout Africa instead of using other parts of the world. This year, we had the shock of COVID and indeed also the political shocks, particularly around the US-China trade war, taught American clients that you cannot rely on just-in-time inventory from small areas of supply chain. You've got to diversify it, right? And I think that's been the biggest lesson of this year. There were whole periods, let's say in the early part of COVID, when China was shut down, when people couldn't distribute goods because there was one component they were waiting for from one supplier in China. So Africa provides a huge alternative to China as a supply-based link. It's rich in mineral fuels, it's rich in gems, it's rich in precious metals. It has 20% of the world's youth population, huge workforce. And also, I think now, with the free trade agreement, it provides a contiguous market and at a relatively low cost. So I think that it's a very compelling story for US companies, specifically because of those reasons.
Yeah.
I think it is also interesting to see where this has come into effect using, let's say, tech companies rather than companies that are chasing specifically around minerals or other natural resources. So a report recently published by Google said that more than 300 million Africans gained access to the internet between 2010 and 2019, and more than 500 million new smartphone connections. Right. So the pandemic will only really accelerate this trend, and we've seen a huge growth in ICT and technology across Africa. In a way, that effect can be jump started by this experience and makes it even more compelling for US companies to operate in as you get to contiguous market. Yeah. I believe in Ghana grew by like 74% or something in the last couple of years.
Yeah, my heart is singing as you say all of those things, Jeremy, because I see them, I experience them when we travel around the continent. I've also witnessed the strides that have been made by the political leaders to try to make sure that they are able to improve the business environment. But there are still a number of challenges to investing on the African continent. Let's talk about those and assume maybe there's a government official, bureaucrat, or perhaps a head of state, who knows, who's listening and watching us talking about what they could do to try to make it easier for American capital to come onto the continent. What are those challenges?
Yeah, they need to improve standards. They need to improve processes. As I say, the Namibia beef deal, it may sound simple, but that's a huge change because agri also is a very contentious issue here. So if you can get to the point where there is confidence around standards, that will really happen. In a way, that will lift all boats. If you look at the ease of doing business index, I believe that the highest ranked African country is Mauritius, which incidentally is a country we do a lot of business in. It ranks, I think, 13th. But the reforms, I think, also have been notified recently in Togo, in Nigeria, and elsewhere. This is the sort of thing that's very important, but it is a slow burn, right? And it's very important that we have patience. And for us, it's a very important part of our business to focus on our Western and American in particular clients to sell them the African story, but it does take time. And in a way, one of the problems this year has been in this emergency panic around COVID. Maybe Asia is an easier, a quick win for diversification from China, from Africa. But I do think these stories are very interesting. We had a case recently in Kenya, for example, M-Pesa, their mobile payment service. Yeah. You may be familiar with. That is by Safaricom. That's something we do. That's actually really cutting edge. You get stories in Africa, perhaps because of the lack of traditional infrastructure or landlines or whatever else it is, that jump across the process and actually get us to a better point than we were to start with. Yeah. And some of the digitization work that's being done with us and our clients in Africa is really cutting edge. And the work we've done with Safaricom and M-Pesa are the same. So I think these are all good examples of where you almost start with a clean slate, and in terms of manufacturing. So that's why we're very bullish. But it is very important that African governments and African countries understand the transparency and process and clarity, and for example, being able to expatriate profits. All this stuff is very, very important and are typical of emerging markets.
Yeah, of course. So looking at what you are saying, regulation is a big part of what needs to be done in order to be able to make the continent more attractive. You speak of standardization, and I'm hoping that perhaps with the Africa Free Continental Trade Area, we will answer that issue of regulation and standardization, because to a large extent those will be demanded out of the agreement itself when it is implemented. When you look though at the ease of doing business, are there specific areas perhaps where you see greater need, things that could be easier for governments to improve on?
Well, I guess it's rule of law, standardization, the ability to appeal, the ability to challenge, the ability to not get ripped off, if you like. But I think the free trade agreement will help that, because it will make the continent more competitive with each other. So when you get free trade agreements, you will generally get a natural leveling and an improvement in standards, because if you don't have those standards, you will be left behind, right? So I think that those should naturally happen. But it's very, very important that if an international company decides to manufacture or distribute in Africa, and there's some problem, that they have the ability to appeal it, to challenge it, to remediate it, to repatriate their profits, to convert their profits, all this stuff. I think everyone understands that, but I do think that will naturally get improved by the free trade agreement.
Yeah. And sometimes I also get the sense that we in the media don't do a good job, because just the other day, I know the exchange control regulations here in South Africa, the last bits were lifted, but I didn't see a hula baloo on that. And yet for years and years and years, people had been talking about this like it's a big issue. The other thing, of course, about the African continent is that we have a long history I'm reminding you that mankind, of course, came from the African continent. But one of our bits of history is around how we view people who come from outside to try and invest on the African continent. And I'm asking you a question here around how, as African, let's say, governments, and then talk also about businesses, view American investors who may be looking at our continent.
Right. So this is actually in a way different from, let's say, corporates taking Africa and deciding to manufacture, distribute, and do their business there. This would be Africa as a destination of investor funds, and in some ways it's considered to be a frontier market if you maybe excluding South Africa. So that's another very important part of our business. And even though you may say it's not directly linked to corporates manufacturing in Africa, it leads to it, because if you get capital flowing into Africa, even if it's initially flowing into the foreign exchange markets or into the government bond markets, it will get comfort in Africa and then do more in the equity and private equity markets, and therefore provide funding for projects, et cetera, et cetera. So interestingly, we spend a lot of time talking to large institutional investors, most of whom are based in the US and to some extent in Europe, about the opportunity in Africa. And historically, the problem has been that they felt it wasn't large enough. So if a client like BlackRock or one of these multi-trillion-dollar asset managers gets excited about Africa, historically, it's not been that easy for them to make an investment of any meaningful size for them. But interestingly, in the last couple of months, the best performing bond market in the world in US dollar terms, you may or may not know, it was South Africa. And that's because the currency improved at the same time. So it showed a US dollar return of 38%. Right? Now, in an environment where global interest rates are basically at zero or even negative, where equity markets are very high, where huge institutional investors are looking for destinations to park their money, this is really compelling. And interestingly, for example, now Ghana has 1,000 basis point yield premium to other markets as well. So I think this is a big area of focus for us. And when you get large institutional investors comfortable in the foreign exchange and in the government bond markets of these countries, it will follow that they will be willing to take more risk in investing capital in projects and in equity markets as those opportunities arise. So that's very exciting for us. The other thing related to investors, which I think is very important, is the Mauritius financial hub. Right. We talked about governance and transparency. The Mauritius hub has done a super job of that. It is very well regarded globally. They've put together a great jurisdiction and great best practice. And actually, Mauritius also operates to some extent as a hub for Indian asset managers as well. But that model it has been successful. So Mauritius is probably a bright spot, which gives more comfort to international investors as a mechanism for investing into Africa. So for that, that's already working very well, and something we're very excited about.
Yeah. Before I talk about the role of institutions such as yours in facilitating trade between the African continent and the US, I wanted to ask you, in terms of what you're seeing on the ground as Standard Chartered, are you seeing heightened activity and interest onto the African continent? And if so, I just wanted a little quick chat on what sort of sectors you're seeing that interest being directed at.
Yeah. As I say, I think what's important is to differentiate those sectors which are already in Africa. So oil and gas, for example, has always been a big business in Africa because there's a lot of oil and gas there. Mozambique, Angola. In July of this year, there was a 14.9 billion Total invest in LNG project in Mozambique, for example. So we've always been involved in those, but if you like, they're driven by where the LNG is, or wherever that thing. For me, the most exciting part is, I think, two things. Firstly, when Africa requires infrastructure, which of course it does, will foreign capital be attracted to it, and can it be structured in a way that attracts foreign capital? And that's a very important area for us. And the other one is these US tech companies. There are a couple of interesting stories. Microsoft, for example, when will they use Africa more because of its human capital as a place to do business? They've made decent progress in Africa with Africa's first hyperscale data centers, you're probably familiar with, in South Africa. And those are aimed at promoting business innovations in the cloud. And they've also launched an Africa Development Center, which has sites in Nairobi and in Lagos. Yeah. And these are designed to serve as a center of engineering for Microsoft, where the top African talent can create solutions around fintech, around agri-tech, for local and global impact. That's very significant, because that's where you're using Africa as a kind of breeding ground for the rest, like a sort of Silicon Valley model. The ADC is the first global development center in Africa that Microsoft has done, and they think they're going to put as much as $100 million into it. Google is another great example. In 2019, they built this underwater cable named Equiano. That project will start in Western Europe and run all the way along the west coast of Africa, from Portugal down to South Africa, with branching units. So this is a big project as well that will enable Africa to be a place for the human capital, for the internet companies, for tech companies, not just based on what's in the ground, but what's based in the people. And I think these are very, very significant.
They are great stories. They are great stories. Certainly that Microsoft one is one we are going to be following up here on CNBC Africa. I've already had preliminary discussions with them about what they are doing on the continent, and we'll certainly run with it. But I wanted to know, where do you as a bank come in and how?
Okay, so we would come in a variety of ways. Firstly, we have a lot of people on the ground. So that we have in most of the large sub-Saharan African countries, we have banking, retail, and institutional banking. So we're there. So we're banking the local companies. But our main activities from the Americas point of view is bridging those encouraging companies in the Americas, large, big companies like Google, like Microsoft, and others, to invest in or manufacture in or operate in the countries. And the compelling story for Standard Chartered is that we can help you on the ground. We can help you all the way from your employee banking, from your setup, to lending to your company, and actually helping, for example, financing your suppliers, financing your dealers, whatever else you're doing. And that can create a huge encouragement for those companies. That's exactly what we want to do. When it comes to infrastructure financing, for example, we want to do project financings that can help build that infra around Africa, working closely with export credit agencies, working closely with the various governments with whom we have strong relationships. So that's another area. And then finally, on the investor side, when it comes to the large institutional investors and asset managers who wish to invest in Africa by buying the local bonds, by buying the local equities, we can operate as a broker, a dealer for that business.
Yeah. At the moment, Jeremy, is that a hard sell to try to get those guys to bring their money here onto the African continent, be it for infrastructure or coming into the bond market, or perhaps trade finance?
Okay, I think if it's infrastructure or the bond market, if the structure of the infra or the bonds in terms of the securities, it's not a hugely hard sell. There are enough frontier funds that want to find these things. I would say generally there's more demand for investment in Africa of that type, securitized investment, than there is supply. So in general, I think that is not such a hard sell. It's more really the availability. I think getting a corporate to set up an operation in Africa, to manufacture in Africa, to distribute in Africa, is a harder sell, and it takes much more time. And I think that is something that is a slow burn, but which everyone agrees clients need to do over time, and especially because of the supply chain shocks that were created by both COVID and by the unpredictability of the US-China trade spats. I think it make it very, very compelling. And so it's a big part of what we market to our clients in the Americas.
Yeah, I imagine, Jeremy, that as your mandate, as your stuff that you do on a day-to-day basis, you're trying to see if we can get Africa to be perhaps amongst the top 2 or perhaps the top investment destination for American companies from your perspective. Do you have a sort of a time horizon in terms of which we see us being able to do this, given we've got the Africa Continental Free Trade Area coming?
I think Africa will. The free trade area will make a significant difference to it. Will make a significant difference to it. But it does take time for people to set up operations in that way. So it will. I think it's probably over the next 2 to 4 years that you'll see significantly more U.S. companies invest in Africa as a result of the supply chain shock we had this year. I think also for us at Standard Chartered, it is a very compelling and important proposition because, relatively speaking as well, we are particularly active in Africa, and we want to market that because we think that's very, very important.
Are you excited?
Yeah, absolutely. I mean, we love our business in Africa, and we really enjoy working with our colleagues there. And in fact, we have a lot of in our staff. We have many of our African colleagues working over here, and vice versa. So we connect with them a lot. and we're very excited about the prospect. Yeah.
Thank you very much, Jeremy. Jeremy is Jeremy Amias is Vice Chair Americas at Standard Chartered, and we're certainly hoping that that optimism that you carry will result in more money flowing onto the African continent, and that it will help in achieving our dreams. That's our program for today here on BanKable Insights. Thank you for watching. Until next time, goodbye.